Stocks collapsed, real estate crumbled, trillions of dollars disappeared almost overnight. Millions of people lost their savings, their jobs, their sense of security. But gold? It didn't just survive, it surged. Every time the system shakes, gold returns. Why does this happen? And why should it matter to anyone who wants to protect their wealth? Gold isn't magic. It doesn't create wealth out of thin air. It doesn't generate interest or dividends. What it does is preserve value. Unlike cash, gold cannot be printed. Unlike bonds, it's not someone else's promise. It exists independently of any government or financial system. It is tangible, scarce, and universally recognized. For thousands of years, societies have trusted gold to hold value, long before modern banks, stocks, or currencies even existed. Every major financial crisis follows a pattern: excessive borrowing, inflation, panic, and collapse of confidence. Stocks drop, bonds fluctuate, currencies weaken, and suddenly people remember one immutable truth: gold maintains its value when everything else falters. Take the 1970s, for example. Inflation in the United States ran rampant. Savings lost purchasing power almost overnight, yet gold prices exploded. People who understood this hedge survived the erosion of wealth that most of the country endured. Fast forward to 2008, the financial system nearly imploded. Lehman Brothers collapsed, mortgage-backed securities failed, banks faced insolvency. People lost jobs and homes. But gold rose. It became the safe haven for those who understood that in times of uncertainty, the tangible, scarce, and universally trusted asset outperforms everything else. The lesson was clear. Gold does not rely on promises. It does not require trust in any one institution. Its value is intrinsic. Even more recently, during the COVID-19 pandemic, central banks flooded the system with money. Governments borrowed aggressively, stocks plunged, and volatility spiked. Investors again turned to gold, driving prices upward. Every crisis follows this same behavioral pattern because people understand, intuitively or consciously, that gold is security. It is not about getting rich, it is about not losing everything. Yet many people criticize gold. It doesn't pay dividends, they say. It doesn't produce income. That is exactly the point. Gold's role is preservation, not speculation. If you focus solely on returns, you miss the underlying strategy. Preservation is the foundation of wealth. Without it, even the smartest investment strategies can crumble under systemic shocks. Investors flee to gold not because it is exciting, but because it is reliable. It is insurance against the unknown. While other assets fluctuate wildly, gold quietly maintains its worth. It is the constant in the storm, the anchor when everything else drifts. And it does this predictably across decades and centuries. Every crisis confirms the same pattern. When fear and uncertainty dominate, gold shines. Gold survives because it is scarce, trusted, and outside the reach of money printing. Its scarcity cannot be manipulated. Its trust is universal. Its value does not depend on government policy or financial engineering. Owning gold is not about greed. It is about understanding leverage, risk, and timing. Those who ignore this lesson pay the price when markets crash. Those who understand it gain security. To protect wealth, allocate a portion of your net worth to gold or gold-backed instruments. Track the macroeconomic signals, inflation trends, debt accumulation, currency weakness. Treat gold as insurance, not a speculative bet. Use it to offset risk, preserve purchasing power, and survive cycles that destroy fiat money. Think long-term. Understand patterns. Prepare before the crisis hits, not during. Gold is more than a metal. It is a language of stability that transcends politics, markets, and institutions. It is the tool the wealthy use to protect themselves from cycles that wipe out ordinary investors. Understanding it means understanding the mechanics of wealth itself, the invisible forces shaping economies, and the behavior of markets under pressure. If you truly want to understand wealth and risk, gold teaches one of the most important lessons. In an unpredictable world, preservation comes before accumulation. Gold has survived empires, currency collapses, wars, and crises, and it will survive the next one too. The question is, will you be ready when it does?